Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 5th. I'm going to take just a brief minute to discuss what markets did last week with the S&P 500. The winner last week finishing up 24 basis points, or up 0.24%. The mid-cap index was down for 15 basis points, or 0.15%, and the small cap index as measured by the S&P 600 was up 10 basis points, or 0.10%. And so last month was a great month. You wouldn't have known it if you were tuning in on one of those Mondays in the beginning of the month when the market was down over 1,000 points, when it was down 800 the Friday before, back in the beginning of August. But you finished the month up over 2% on the S&P 500, and the volatility that you saw in August was very short-lived. You saw a very steep slope down and then a steep recovery right back up. And so as we're heading into September, as we start to get closer and closer to that election, we expect to see some more volatility creep into this marketplace. We don't expect it to be as smooth as it was in the month of August. And a lot of things are indicating that. Unemployment rate is ticking up. There are signs of the U.S. economy slowing down, which is what the Fed does want, is a slower U.S. economy. But investors are now weighing, is that a slowing U.S. economy, or is that a U.S. economy that's going to head into recession? And that's the debate that's going back and forth. And so we start this week, and you see the manufacturing index come in less than expectations, and that's what got the recessionary fears and concerns really driving the marketplace higher this week. And so what do you do if you know that volatility is going to creep in? We have tick ups in the unemployment like we talked about. Auto loan and credit card delinquencies are starting to tick up again. Now, they're not back to pre-pandemic levels yet, but they're starting to increase. As I said, the manufacturing index slowing down. Signs of the consumer slowing down and pulling back are evident in some of the retail reports that we're getting. So it's one of these things that, how do you navigate this volatility that we really expect to see in the months leading up to the election? Well, there's two things that you can do. If you have some big winners in your portfolio that you think, hey, this is all I'm going to get out of this for the time period, it's okay to take some profits, lock those in, because the high flyers that have been flying high will be the names that get clipped first in a market pullback. And then if you have some that have been underperforming and you don't really think their prospects are good, well, in a down market, they're not going to rise higher. Go ahead and trim those as well, and get some cash to put in on the sidelines. Sitting at 5% right now is not necessarily the worst thing in the world, and this is what you can do now to take advantage of the volatility. So as the market becomes more volatile to the downside, as we suspect it may become, take the cash that you have sitting on the sidelines, identify, build a bench that you see of names, whether it's the names of profitable stocks that you sold and that have just come down at more attractive levels to buy, or they're new names that you want to introduce into the portfolio. Build that bench and go ahead and get ready to pull the trigger when the market comes back to you at a level that you feel that you're getting a good discount, or that you're buying it on sale, as we like to say. So that's how we can play this market as we head into the election. No one has a crystal ball. No one knows what the policies are going to be, who's going to win. We have geopolitical issues outside of the United States that are driving markets as well. And so we have a big wall of worry to climb, but we still have had great returns year to date in equity markets, 3 times that of cash. And that's why it's important to always be positioning yourself on how to navigate yourself through the market and being in the market to participate and get the gains that you can possibly get. So if you have questions about how to navigate the volatility that we anticipate, please feel free to give me a call or give us a call. You can reach us at 904-346-3460, or always visit us online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.